Hello everyone, today is Friday, October 1st, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If this is your first time tuning in, thanks for joining us. Thanks for being here. Here's how these videos work. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets. We look at things like credit markets and volatility, correlations, market internals, everything beyond price to try and get a better sense of market messaging and what it's trying to tell us. And then in part two, we look at the charts. We jump in and take a look at those long-term trends and try and best position ourselves and make sense of what's going on from a broader perspective. So hopefully that sounds good to you. Let's jump into some of the takeaways, some of the headlines from this week. September is in the books. We closed out the month. It was the worst performing month so far year to date. That doesn't really tell us a whole lot because this year has basically been up, and up. So we finally got a little bit of a shakeup here. The S&P 500 closed down almost 5% for September. Nasdaq was a little bit worse, down almost 6% for September. So starting to feel a little bit more turbulence out there. And coming into October, of course, we started the month off with a bit of a rebound. We'll talk more about that later in this video. We also saw the US dollar making fresh year-to-date highs for 2021. So we're getting a meaningful pullback in equities. We're getting a rise in the dollar. We saw interest rates start to break out. So lots of interesting kind of dynamics going on. And we did see the Russell 2000 outperforming relative to the other major US averages. So lots to talk about throughout today's video. Let's first take a look at the numbers here, and you can take a look at the right-hand column. We've got a sea of red across the board. Notice now also the 1 month numbers, also all negative here. So this is the first time this year that we've seen basically blanket red here on the right-hand side. And if we look at, again, this week's performance, the Nasdaq was the underperformer, and the Russell 2000 almost got back to break even after everything was said and done. Also take a look at the 1 month numbers here on the Russell 2000, starting to show some relative performance, even from a longer term perspective. So something to keep an eye on as we head through October. If we take a look at market internals here, so this was where we really started to, put up the magnifying glass and take a hard look at what the market internals is telling us about this market. And you can see that it's this glass half full sort of narrative here. And I think both the bulls and the bears can kind of use this to their advantage in their narrative, because breadth is weak, but it is not outright bearish, at least in the 52-week highs minus lows. So again, for long-term listeners here of the market videos, this is one of my favorite metrics to look at to gauge the intermediate term health of the market. And you can see we had a 0 day on Tuesday. We had a negative day on Wednesday. We had a negative day on Thursday. Friday and Monday were our saving graces here. Friday numbers are not finalized numbers, just FYI. So these are probably going to change, but it is hanging on. And to me, that is at least glass half full constructive, that they are not expanding lower throughout this pullback, right? So we saw negative performance here across the board in terms of major US averages, but we did not see this totally unraveled to the downside. That to me is almost a hint of bullish divergence there. There's lots of different ways you can interpret market internals. I'm sure there are lots of different readings where people could take a very negative stance by these numbers, and that's totally fine. I am okay with that. But when I am keying off of a more intermediate term basis, this top row here is what I like to look at, and so far hanging in there on thin ice. So we're going to continue to monitor that. If we look at the AD line here, you can see net on the week, it was negative. So that is, to me, a more of a short-term kind of gauge. That's the way I like to think about it. And that was negative on the week. So I think this is going to penalize our scoring system at the end and put a strike against market internals, mostly because, again, thin ice up top and pushing the negative down here. S&P 500 stocks, above a 20 SMA, only 32.4%. So if we take a look at the NYSE 52-week highs minus lows, you can see we have gotten to a very flat territory here. We are not in a strong uptrend anymore. We are moving sideways with still a gradual hint of moving higher here. So again, everything is just basically on watch right now, but I am very cautiously optimistic. If we take a look at sector performance, you can see it was pretty ugly out there unless you held energy stocks. That was basically what moved this week, was energy stocks, and moved a lot, 5.78%. Take a look at that 1 year performance in energy stocks, 92.36% to the upside over the past 12 months. Congrats to the energy bulls. It has been a tough multi-year stretch, and they certainly have gotten rewarded so far over the past year. So that was in the green. Financials, second spot. Materials in the third spot, both of those negative. On the downside, we saw healthcare, we saw technology, and we saw staples. Pretty interesting bunch down there, but that's what we had, underperforming down anywhere from 2.25% to 3.5%. If we take a look at correlations, we saw a couple of things break down. We also saw the dollar sort of rear its ugly head here. So again, take a look at this row right in here where my cursor is. So UUP, that is the dollar index. And if we take a look at this row specifically, we can see that the dollar index and its strongly negative inverse correlation, sorry about that, to the Nasdaq 100. So as the dollar rises, putting pressure on tech stocks, and there's obviously a tie-in here to what interest rates are doing, and a lot of different narratives I think we could kind of spin up here. But if we're just purely looking at the correlations over the past 10 days, you can see that is clearly moving together. And again, these are inherently a bit noisy because we are looking at short-term correlations, but they can give us a little bit of sense of kind of what's driving the action and moving together. So that is pretty much the standout there from my interpretation of that table. If I take a look at volatility, so you can see this week did move back up into the 20s. We couldn't close below 20. That's a little bit of a concern here. Also notice though, look how much this has come in here, the premium between the front month and the 3-month out VIX volatility term structure. So again, this is actually one of the tightest spreads we've seen in some time. So that is curious out there. That is interesting. Of course, that can happen when markets move into backwardation, when there's extreme fear priced in the front month. Everybody's out there panicking, buying volatility. That skyrockets the front month of the VIX, and you get the kind of opposite curve there, which doesn't happen all that often. We're not there right now, but certainly, you're getting more of that. You can tell there's fear in that front month, especially based on, again, just look at the slope of this curve from last week, the orange line, to what it looks like on this blue line. If we take a look at interest rates here, so this was the interesting and notable move, especially at the beginning of this week. Certainly things tapered off because we can see that the 5-year yield actually closed negative. 10-year yield was only up slightly. This closed the prior week very strong, and then it accelerated in the first half of this week, but then it sort of tapered off into the end of the week. We're going to look at these charts a little bit later, but this is obviously a pretty interesting, important narrative to pay attention to and kind of hear what the credit markets, bond market, interest rates are telling us as an entire story. If we look at investment grade and high yield bond funds, you can see both of these were pretty firmly negative. This also is a little bit of an X here. This is a issue if we start to see credit markets really roll over and start to signal some type of worry. So I don't like that these closed where they did, but we're going to have to keep an eye on that as well. If we take a look at dollar and commodities, so again, you can see the big move in the dollar, up almost 1% this week. That is a big move for the US dollar. You can see gold was actually up, silver actually up, Bitcoin was up pretty darn big, 18%. Nice move there. Ag was up, crude oil was up, natural gas was up. Nothing seemed to care about what the dollar was doing this week in terms of commodities, or certainly things denominated in commodities if you don't like the commodity classification on some of these items. So this is certainly an interesting bunch here. We're getting maybe a little front run or just not caring about the move in the dollar in terms of these these particular assets. So if we wrap it all up in the report card this week, there were lots of X's. There were lots of things that are right on the cusp. So market breadth, again, very thin ice. This almost was a check mark, but we can only give one signal, so it was almost at that neutral line, and a lot of other things in a very similar situation. So we get a D here for report card when we look at all of the facts, all of the data that we ran through. Not that pretty, but again, lots of things in that neutral zone. Let me show you how we are positioned right now. There is no uncertainty about what our systems are saying right now. They are telling us to be long, and that can be uncomfortable, and I totally understand that given what the market has done throughout September. But our longer term system up here, Merlin, continues to stay invested in this market. It is looking at the action. It is almost ready to start to de-risk a bit, but not getting enough convincing action. So it is still sticking with this market 100% long. And even our short-term system came furiously buying a bunch of new positions, trades in the morning here on Friday. It had been long last week, and then it was short some things midweek, and then it was, you know, much less exposed on like Wednesday and Thursday, and then into the weekend it ratcheted back up exposure. So it's been trading a lot, unlike Merlin, which has basically just been kind of, you know, rotating through some positions, but basically sticking with the long side. So that is how we are positioned. Those are two trading systems that we have memberships for. We send out trade alerts, easy to digest notifications so everyone can follow along at their own pace. We post performance every single month. Everything is very transparently kind of laid out on our website. So if those systems interest you, check them out on our website. There's 14-day free trials available as well. And with that, we'll be back in just a moment here with part 2. All right, we are back here. We've got TC 2000 open. We've got our equity market grid we're showing. So we got the S&P in the top left, Nasdaq top right, Russell bottom left, ACWX, which is international stocks, in the bottom right. Price itself are the white dashed lines you see on all these charts, and the multicolored dots are a custom smart trend filter that we've developed. Helps us measure trend strength, and path of least resistance. If you are a Warden TC2000 user, you can download that indicator. You can get it on your platform so you can analyze markets very quickly, cleanly, and efficiently. Head to our website to check that out. Now, if we take a look here at the weekly picture and what's going on, we have some changes here. So for the first time, we have every single market here. So these 4 that we just talked about are in the neutral state, the yellow dot being printed. So this is the first time where we've seen weakness creep in enough to start to interfere or change the outlook on a weekly picture. So that is notable first and foremost. Now, the way we like to interpret, the way we found the most success in sort of analyzing, understanding this indicator is that when markets move to the yellow state, we are still giving the benefit of the doubt to the prior signal. And in that case, it is bullish. So we still, again, are looking at a lens of a glass half full market right here. And it is still on the sellers to kind of prove out that they can press this market, and we would then get a red dot printed when there is sufficient evidence that trend, volume, momentum is shifting to the downside. So we haven't seen that yet in any of these markets. That's what we're going to be watching, though, as we start to move through October and gauge the first week of trading here coming up on Monday. So that is notable. Nasdaq, again, printing that yellow dot. S&P for the second time in a row. Russell 2000 is just a champ at printing these yellow dots because it's gone nowhere all year. And the ACWX here, you can see his price is actually convincingly below our smart trend filter. So we're going to have to especially keep an eye on this one heading into next week. So that is the weekly time frame. Let's go down to a daily time frame. And you can see a lot more turbulence, a lot more negativity here in all of these markets. And this had been the case now all of this week and most of last week. So again, you can see the S&P 500 has been printing red dots on the daily chart all the way from Monday of last week. So basically, if you're following, again, this simple heuristic, this simple model, for the past 10 days now, it's essentially been telling you that you should expect turbulence and volatility here on all of these markets. So S&P 500, you can see below its daily trend, has not gotten above it, still printing bearish, so it has more to prove. Same thing with the Nasdaq here. It is convincingly below its daily trend, has to prove and get back over it. And the Russell, this is where we got some standout, interesting performance going on here. You can see a lot more yellow on this screen, so that the Russell is definitely choppy and not as bearish in magnitude as the S&P and the Nasdaq, or ACWX here if we're looking at the bottom right. So we've got our trends down, we've got our outlooks in play here. So let's take a closer look. Let's take a look at some candlestick analysis. Let's get a little bit tighter on these levels. So here is a view of the S&P 500, and first thing is first, just take a look at the range on some of these bars, right? This is notable. This is kind of the first step, TA 101, but just look at the size of these moves here in the S&P 500 over the past 2 weeks. That just goes to show you that markets are heating up, that there is some intensity behind the trading here and the movement that we are covering on the day-to-day basis. So that is certainly notable. We can look at some simple levels here, and we had this 43.80 area drawn in here for a couple of weeks now, and this was our sort of intermediate level, short to intermediate term, depends how you want to define that, but this was the important battleground zone we wanted to see the S&P 500 really sort of stay above, and you can see it chopped above here, or I guess it plunged below this level for a couple of days, and then we saw this nice aggressive bounce, and then that bounce, just as aggressively as it bounced, rolled over this week, and we spent most of the week below it, and then again Friday we came kind of pushing back up towards it. So when I look here at the S&P 500, maybe even clean this up a little bit, you can see that we've got lots of different lots of range expansion here in the short term. So that is a slight negative, or a firm negative, in the immediate term price action. You can see that it is below this area here, so that 43.80 zone, that's what I'd want to see this S&P 500 get back above. You can see we did put in a reversal day here, outside reversal day in the S&P 500 on Friday. So if you want to be as constructive and bullish, optimistic on this market as possible, you want to see a follow through higher day on Monday. That is going to be what the bulls really would love to see, is just continuation of demand coming into this market, getting back over 43.80, and reclaiming some of these prior pivot points and general inflection area. So that's what I think, if you're bullish, you want to be looking out for on Monday. That's the area that is most important to me. If we think about where this market can go, I mean, if we look here on a weekly chart, we are now starting to break some trend lines. Obviously, you can draw these trend lines as lots of different ways. You could look at this channel break here. You could take a more conservative view and sort of connect the dots from a further level. I'm not going to get into that, but clearly you can see that we have broken some structure, and just like we talked about, we're going to want to see buyers take a stand, put in a higher low, and find some support and follow through to the upside. So the next relevant pivot, and it gets a little bit thin when you start looking back down towards these levels, is more so in the lower kind of 4,200 zone, when you start looking at prior breakouts, prior volume areas where price was moving sideways. You get all the way back down to kind of this zone here, which is another 3-4% away from where we're trading, or where we closed at. So there is definitely, some room down here, some air pockets, as I like to usually reference them as, if the sellers, really kind of sink their teeth into this market. If we can't get back over 43.80, if we, gap up on Monday and then we fail and start to roll back over, it really does feel like a, 4,200 magnet to kind of come back into this prior area in here and retest that general zone. But things can move pretty dicey if we start to see that sell off. We'll have to take it one day at a time. Right now, buyers kind of stepping in here, nice reversal putting in. So let's see if they can add to that next week. If we look at the Russell 2000, this big old range, it's just been essentially a laggard here for all of this year. As the S&P 500 has been grinding out new highs throughout the first half of this year, same thing with the Nasdaq 100, the Russell has done absolutely nothing. And now, most recently, as the Nasdaq and the S&P start to roll over, we have the same exact behavior. The Russell's still doing nothing. And nothing in this case is actually slightly good, right? So the glass has sort of flipped here, where the Russell is actually showing some relative performance recently. So let's keep an eye on this. Maybe this is a little secret, kind of hidden canary here, where the Russell can actually start to lead. Maybe it's time for the S&P and some of the big caps to take a breather while the Russell 2000 and some of these components start to actually work up and help support this market. So that's something that I am keenly sort of watching right here. I do have a sneaking suspicion that might be what we see is a little bit of Russell leadership, but right now it's still super early and hard to say. We're going to want to see that breakout. We're going to want to see this move to the top end of this range and start to get back into those 230s to get a little more convincing on that thesis. So that is the Russell. If we look at the Qs here, this again has been kind of stair-stepping lower. We've talked about all these different little, consolidations, this grind lower, but really, Monday or Tuesday of this week, I should say, is when we had the real sort of reset here where, the bounce felt good prior week, but that quickly, all these dip buyers that came in on this first move quickly felt underwater here after Tuesday's session as we kind of slam back down. And what's notable about the Qs though is this level here, this 360 zone, which was roughly this August pivot low. We had some other pivots in here and some prior levels of interest. This held. I mean, this is where we kind of closed on the week, over kind of hammering out here, slightly heavier volume over this 360 zone. So again, there's some signs of life, but we're going to want to see that follow through to the upside. Same thing with the Qs. I mean, we've got this little, pivot here from July where buyers stepped in, and it's, fairly meaningful. There's good volume traded here. There was some, certainly some urgency as the markets gapped down and sort of snapped back around this 353 zone. We didn't fully retest it on Friday, but, if that gives way, there is, a pretty good air pocket all the way back down into the 340s. Again, I don't want to say we're going to get there. I'm not making a call down there, but that's another 6-7% from where we're currently trading. If you think this market has another leg lower, if we're going to see continued weakness, 340s to me on the Qs is definitely a level I think we could revisit if we see this weakness creep back in. So keep an eye on that. But right now, again, nice hammer here on Friday. Going to look for that follow through and see if buyers can follow through and step back in. So that's it. That is the recap there on some of the shorter term levels to be paying attention to. Let's move on to some other markets, see if we can get some other clues here. So if we take a look at VIX, so VIX over 20, again, that's always where I dislike the market effectively from a nice trending perspective. We want to see the VIX underneath 20. And I like the action here on, at least on Friday, of course, closing at the lows of the session, going into the weekend. That was good to see. Would have loved to see it just, again, drop even more. But for now, these VIX spikes, if we look at this here, you can see these are all the flare-ups in the VIX where we get a little bit of panic in the market. We get the VIX, and the panic we saw 2 weeks ago was up around 28, almost 30 in the VIX. That was concerning. Now we look at this week's panic. Even though markets kind of continue to trade lower, we got a lower high in the VIX. And that to me, again, is at least mildly, slightly constructive, right? The fact that we didn't just see the VIX kind of take off back up into the 30s or break out to more extreme panic levels than we did 2 weeks ago, we saw it contained, or we saw a slightly lower high here in the VIX, right? If we want to use a TA term. So to me, that shows that maybe there's slightly less concern out there, and we got a little bit of maybe bullish divergence, again, if you want to use a TA term, in terms of what VIX and markets did. So that is slightly encouraging to me. If we take a look at one of the other stories again from this week was interest rates. And so if we look at the 10-year yield, you can see again just how vertical this got coming into this week. So we saw the 10-year yields break out to fresh multi-month highs, and we saw it just go vertical for about 5 days. By the end of the week, it started to roll over a bit here. And again, that's what you effectively saw, where the markets were then finally comfortable enough to rebound as well. So as yields came down and as that fear of interest rates just going vertical sort of dissipated, we saw a little bit of that stabilization in the equity markets. That was one of our takeaways from last week. You wanted to see, you know, effectively interest rates kind of go back to chopping around, or they can rise. They just, you don't want to see them rise in a straight line. You want to see them, you know, very low volatility sort of trend. So that's what interest rates looked like going into the end of the week. We saw, of course, the US dollar, which put in some heavy volume this week as it broke out to new fresh 2021 highs. So you can see the dollar here looks like it is getting back up, or wants to get back up to some of this chop up here from 2020. So up around, well, if you're looking at the UUP ETF, be around 25.50 or so. We almost got there, but looks clearly like this still wants to trend higher here over the short term. If we take a look at oil, unfazed, new year-to-date highs as well. MACD is leading, good volume coming in, breakout, everything pointing up here for oil. Obviously, it's had a pretty good, you know, move in the past 20 days here off of these lows, up 22%. So the chase is on, but that breakout is working. Same thing for natural gas. Look at the volume coming in here on natural gas. So this breaking out to new fresh highs this week as well certainly has covered a lot of ground recently, but it is clearly a commodity that is coming back from a multi-year downward trend. So that's kind of what's going on there in commodity land. Let's take a look at our sectors and industries. So let's see what we got looking on our bullish list. So it's a pretty short list this week. Let's go to a weekly chart. We like to usually run through these on a weekly. So oil and gas, not to be surprised here. A big volume coming in, new fresh close here. That makes a lot of sense. If we take a look at banks, you can see them having a really good week here as well. So these are the regionals. Heavy volume coming in, clearing above this multi-month range. That's nice to see. We saw casinos, resorts and casinos, actually making a pretty good move here this week as well. So that's a pretty interesting insight there, that on this type of week, with a lot of volatility, with a lot of market selling pressure, we saw casinos working. We see coal breaking out to new highs. We see airports and air services continuing their move to new highs on heavy volume. And we see lumber and wood production here also trying to inch out new highs here and, you know, getting it done. So if we look on the downside, I'm not going to go through all of these, but you can see the list is definitely a bit longer here. So if we take a look at this and we try and theme it out, we do see lots on the consumer cyclical side. So apparel and department stores and residential construction, beverages, tobacco. So even cyclical and defensive selling off this week. And also we had a handful in the tech side. So we also saw things like communication equipment. We saw electronic components, saw health information services, and some semiconductor plays here as well to the downside. This is the full list. I'll let you look at that. I'll expand this so you can take a little screenshot, take a look at this, and page through some of these sectors and industries on your own. But definitely a bigger list on the downside, which is, you know, obviously what you'd expect when all of the indices were in the red. So that's the full market analysis for this week. Lots going on out there. Leave a comment below. Let me know what stands out to you. Anything else you're looking at? How are you feeling about this turnaround going into the weekend? You believing in this bounce? You thinking that buyers are going to step in here, or you think this is still just going to lead to more pain and we've got more correcting to do? Leave a comment below. Love to know what the sentiment is out there. And as always, I want to thank you for tuning in and listening. Every Friday we do these videos. Be sure to subscribe on our YouTube channel, or you can always check it out at thetraderisk.com. Thanks so much. Have a great weekend. We'll see you back here next week.